Welcome to DeFi Crypto today. Our topic today is Mirror Protocol secrets. Yeah, apparently I wasn't very clear on some features of the Mirror Protocol in the previous video, and a lot of people say, how do we do this? How do we do that? And I'm like, how can you not know? So, all right, we'll dive deep and we'll figure out everything you need to know about Mirror. All right, so as always, this is the sheep, and the sheep is gonna get forked if you don't subscribe and not like the video. So like the video right now, or the sheep gets forked. All right. Don't forget to ring the bell so you know when I'm posting new videos also. All right. All right. So like the video, the sheep. Protect the save a sheep, okay? Don't let it get forked. Okay? Like the video. All right. So, what can we do on Mirror? A lot of people are scared of Mirror, but Mirror has a ton of very exciting and fun features. So let's have a look. The very basic, simple thing you can do on Mirror. Well, first of all, make sure that you are on the Terra blockchain. So you need yourself a wallet like this one, the Terra Station wallet, okay? And once it's installed, you make sure that you have some UST. Everything works with UST on the Terra Station, okay? You can have Luna as well, but it's a lot easier to play with UST because Mirror basically, you need UST or AUST in order to buy or borrow any of the stocks, the tokens here, sorry. All right, so, and while we're at it, let's look at the security. DeFiSafety.com is my go-to reference to evaluate if a protocol is safe or not. You have to understand what safe protocol means. A safe protocol means that the code is good, that the project has good security features, and so on. So if you look here, Mirror Finance has a very good score of 86%. So it passes the very strict tests of DeFi safety. Code and team 100%, documentation 89%, testing 68%. This could be a little bit better, but still pretty good. Security 96% and access control 66%. That's a little bit weak, but overall, very, very, very good score. Okay, so what does that tell you? That tells you, first of all, that the code is very solid. The code's been verified. The programmers are experienced programmers. They have very good security features in place. So it's harder for hackers to mess up with Mirror. Okay, that's what that means. The code is solid and the security helps prevent hackers from getting in. Nothing is 100% safe all the time in all circumstances, okay? And even if this was the perfect protocol, you could still lose money. Safety does not mean you cannot lose money, okay? All the investments that are offered on Mirror Protocol are very risky. What we're going to see today are very risky things. Okay, you can still lose the money that you invested. Okay, I want this very, very clear. A lot of people ask me these questions, and these are very basic, elementary questions. So that's why I'm taking the time to explain this to you guys. All right. So Mirror is a pretty safe place to invest. The tokens in it are risky. Okay, that's a difference. Now, also another thing that you need to know, the Terra blockchain here is now number 2 in terms of popularity on DeFi. So if we look on DeFi Llama, notice that Ethereum is shrinking. See, Ethereum used to be almost 100% about a year ago, and now it's at 51%. Soon, it's going to be less than half. Think about that. That's a big change. And who's winning the war right now? Terra. Terra is growing fast. Okay, the Terra blockchain is growing very, very fast. So if you can see here, what do we have? So it grew by 13% in the last month, which was among the best. I mean, there are not many other blockchains that have been growing that fast in the last month, especially, I mean, we're having very uncertain market conditions right now, so it's not unusual for losses and stuff. Like Phantom has been losing feathers quite a bit, unfortunately. I like Phantom, but right now it's not doing so well. And yeah, even Avalanche is not doing amazing. It's barely maintaining itself. Binance Smart Chain is losing feathers, yeah. But Polygon now is going up 411%. Jeez. There's something, I don't even know why it's going up so fast. There's something new at Polygon. I'll have to investigate this. If you guys know what's going on at Polygon, let me know in the comments. All right, enough about this. So we know that Terra is growing super fast. I'm going to look at the chart here. Look at this. It's zooming up. And we can see that Anchor, we're going to see Anchor today as well, and Mirror are doing pretty well. Anchor is up 8% for the month. Mirror is up 8% for the month. Anchor is up about almost 10% for the month. All right, so if we go back here, what do we have here? We have a bunch of tokens. Many of them have familiar names. It's like MAAPL. This is a synthetic Apple shares, okay, that you find only on Mirror protocol. The Mirror here is the farm token from Mirror that you can earn if you use the farm here. If you just buy the token and it just sits there, it's not farming, okay? So all you can hope to earn, like capital gain, if the price of Apple shares actually go up in value, the price of the Apple token should go up as well. Now you got to be careful. Many of them have premiums. What does that mean? Percentage difference between the pool and the Oracle price. So the price in the pool here and the price from the Oracle is different. So you're paying a bit extra here for a lot of these tokens. Most of them actually you're paying extra. Okay, some of them you're paying less, like this one. For Coca-Cola, you're paying less than minus 10% almost. So you have a selection of synthetic shares. You also have synthetic cryptocurrencies like MBTC. What's the difference? The synthetic shares you can only buy during the stock market business hours in New York City, which is from 9:30 a.m. to 4 p.m. Eastern Standard Time. Okay? Outside of those hours, you can't buy them. All right? So you can't trade these outside of those business hours. It sucks, but that's traditional finance for you. The synthetic tokens like MBTC and also M dot here, METH, and so on, those you can buy and sell 24/7. There's no restriction on that. Now, what we're going to look at today, I want you to look at mGoogle, and we're also going to look at mSpy, okay, for two different reasons. The first one is mGoogle. Google as a company is pretty much a perfect business. It makes tons of cash no matter what the hell happens, okay? Unless the government decides to break it up and shut it down or whatever, this thing is designed to make money. It's the most profitable business on the planet right now, as far as I know. Okay, business on the stock market, that is. Okay, maybe if you're a drug dealer in Colombia, maybe you make more money than Google, but probably not that much more. But yeah, Google is extraordinarily profitable. So even though right now the markets are very uncertain, there's inflation that's very, very high, and that the Federal Reserve is planning to raise interest rates very, very soon, Google is still very, very profitable. Now, if we look at the price of mGoogle on the market here, this one, you can see that this is for about a year, since March 2021 till now. It's pretty straight straight up. I mean, there's been a few downturns here, but they're very temporary. You can look closer, the last 30 days. Okay, there were some ups and downs, but still, overall, you're up for the month. Okay, so it doesn't mean that because this is a very, very good stock that you're not going to, that you cannot buy at the top and then end up at the low here. So you could lose money on this, but if you hold it long term, like here, like we have about a year of information here, you will make money. If you bought it at the beginning of the year, you would have paid about $2,200, $2,300. And right now it's sitting at $3,100. You would have made $800. Not bad, just for holding, okay? Because Google is extraordinarily profitable and people trust Google, and it's used by billions of people, okay? Their business model is very, very, very well designed. It's very, very profitable. So if you're looking for a stock to buy in uncertain market conditions and you want to not lose your shirt long term, okay? I'm not saying buy today and sell tomorrow, okay? We're talking, you hold it for years. Google's a good idea. So I'm going to show you how to buy the Google Synthetic today on Mirror. So we're going to do that right now because right now the market should be open and we should be able to trade. So let's do that. So we got trade here. We got mGoogle, and right now I need some US. I only have $80 in my wallet. So what I'm going to do, I'm going to take some out of here. This is Anchor. I've got $1,000 deposited there. That's earning me 19.47% APY. Now, I want, again, to clarify things. I keep getting these questions, and people are very confused about interest rates. It's not confusing, people, okay? You need to know math a little bit. And if you're scared of math, well, just look at the page here. So what does that mean? See, I've got about 1,000, and we're going to earn about 19.5%, give or take. What does that mean? It means that if you keep $1,000 on Anchor Protocol for a year, you're going to get how much? $195. That's 19.5%. Very easy math, okay? I mean, you can see the link between the two numbers, okay? You're not going to get this overnight. You're not going to deposit that today and you're going to get 195 tomorrow. No, you have to wait a year. Okay? Now, if you wait a month, you're going to get 16 bucks. If you wait a week, you're going to get 3.75. And if you wait a day, you're going to get 53 cents. Okay? They make it easy on Anchor to see how much money you're actually making. Okay? So keep this in mind because we're going to use this later when I show you another strategy. Okay? Right now we're doing the very basic, simple buy a synthetic stock and hold it. Okay? Can't get simpler than that. So what I'm going to do, let's say I want to buy about $100 worth of Google synthetic. Okay, so I'm going to withdraw 100 and proceed, and we post. So we confirm that in the TerraStation wallet. It's going to take a few seconds to process. Once it's processed, I'm going to have an extra $100 in my wallet. All right, so right now it shows here that I have 180 bucks in my wallet. I want to spend 100 and buy the Google Synthetics with it. So going back here, and right now it doesn't see it, so we're going to refresh. Okay, now it's seeing it. All right, we're going to have to change that. It gave me the wrong token. So we're going to put 100 here. We're going to change mirror for Google. We have to scroll down. I thought we could. No, let's do it. MG. Okay, Google. There we go. So we're going to get a tiny fraction of the stock. I'm just doing this for demonstration, okay? So, and we're buying, and we confirm, right? So what's going to happen is we're buying the shares, and now we go to, it's bought already. So we're going to my shares, and it's showing what I've got in the wallet that relates to Mirror. So I've got a tiny bit of Mirror tokens here that I had previously. And I've got Google synthetic stock that I just bought now. If I want to sell it, I can hit trade, okay? And see it says buy and here sell. So if I want to sell it, I just click this. And of course, I'm losing a little bit here because there's a fee that's taken. When you you do this, they charge you some transaction fees. All right, and then I hit sell or whatever. But right now I want to keep it. I don't need to perform the selling operation. This is just to show you how to do it. Okay. Okay. All right. So now let's go back to my page. And these are the positions that we've got right now. Now, what we want to do is I want to perform an operation that I did last time in a previous video. And this position is basically what we're going to do is we're going to borrow an asset, a synthetic asset that we think is going to go down in value over the next several months or a year. We want to borrow it, so we're going to short it. When we borrow an asset, we short the asset. When we buy the asset, like we bought Google here, we're longing the asset. We're going long, okay? So try to remember these terms. When you buy something to own it, you're going long. When you borrow an asset, you're going short. Okay, and when you're going short, you have a debt. Okay, here we have an asset because we're going long. So it goes in our balance sheet, our personal balance sheet. The Google stock here is on the asset side. Okay, and we're hoping that it's going to go up in value, because Google typically always goes up in value over time, over the long time. Short period of time, yeah, it can drop and fluctuate a lot, but long term, it tends to go up and up and up and up. Okay, and that's why we're buying that now. Okay, now, which asset are we going to buy that we think is going to go down in value? Well, we're going to have a look. First of all, we can go, should we go directly to borrow? Maybe we should, yes. So here we can borrow these assets and we're going to mint them, and there's a minting fee of 1.5% when we pay it back. So there are no, and these are interest-free loans, people. That's very important. You can borrow these synthetic stocks forever and not pay 1 cent of interest on them. You only pay 1.5% minting fee when you pay them back, when you reimburse your loan. And we're going to show you today how to do that as well. We're going to make a loan. We're going to use the strategy that I explained in a previous video where we're going to be looping. And then we're going to unloop and close our position, because apparently I keep getting these questions. I got about a dozen people that kept asking me, okay, I performed the loop. How do I unloop this? And I'm like, okay, all right. I thought that was self-explanatory, but apparently it isn't. So let's do this. All right, so let's look at the assets that we've got here and let's find a loser, because essentially we're looking for an asset that's going to go down in value, okay? And my favorite loser right now is MSPY. So let's go with MSPY. What's MSPY? MSPY is the synthetic spider S&P 500. What is it, right? It's an investment fund that mimics the S&P 500 on the stock market. Okay, so in the United States, the top 500 most popular stocks are put into an index called the S&P 500, Standard & Poor's 500. Okay, and some investment funds just copy the S&P 500, and basically they buy the same shares in the same ratios as what are listed on the S&P 500. So if you buy those investment funds, it's essentially the same as if you were buying the entire stock market or the entire index. So it's not managed. The index is just a reflection of the value of the entire stock market. And it's usually a good idea to buy index funds like this because the fees are very, very low, and you get if you're bullish on the stock market long term, you should go long. But right now we're bearish, at least for this year, or at least for the foreseeable future. Maybe we're going to become bullish again on the S&P 500, but at the moment I'm very bearish. Why am I bearish? Okay, inflation is sky high. It keeps going up every month right now. The S&P for the last several months has, not the S&P, but the inflation for the last several months has been going up. Okay, it's 8.5% in the United States. It's going up also in Europe and around the world, but it's sky high in the United States right now. That's not a good news. Why? Because the central bank, which printed too much money, which created this inflation, now says, oh, we printed too much money and we're having too much inflation, so we have to raise interest rates. Now, if they raise interest rates, that makes the cost of borrowing much higher for a lot of businesses, okay? And that will slow down the economy, because a lot of businesses will say, well, that's too expensive to borrow to open up a new factory. It's too expensive to borrow to buy new equipment. I'm not going to hire more people, and so on and so forth. So it tends to slow down the economy. Now, if the economy in the United States slows down, the stock market will usually go down also. All right. And typically, every time the Federal Reserve announces that they're going to raise interest rates, the S&P 500 goes down quite sharply. Okay. And now we're expecting that the Federal Reserve is going to raise interest rates quite a bit at their next meeting in a few weeks. So maybe it's time to buy this, to short the S&P 500. Maybe we can profit from this. So let's try that. Okay, so right now we have to use an asset as a collateral because we're making a loan, right? We're borrowing some MSPI tokens. So as you can see here, it says choose a collateral asset. Right now it says UST, and I only have $80 in my wallet right now. But let's say I wanted to use more collateral. I could use these two, but I don't want to play with Google right now. I want to make it simple for you guys. So I've got AUST, and I've got 729 AUSTs right now. Each AUST is worth 1.23 USD. Now, for those that don't know what AUST is the anchor. That's what the A stands for. The anchor receipt for your deposit. So as you remember, right now I've got $900 deposited on Anchor. These $902 are converted into 729 AUST tokens. Okay. And that's an asset that I can use as collateral. So I could go here and let's say, I don't know, let's put 100 AUST. Okay. And that will allow me to borrow 0.15395 MSPI tokens. Okay. And it says only available during market hours. I believe the market is open right now. As I mentioned earlier, 1.5% fee for the minted value will be levied when the borrowed position is closed. So right now they're not charging me that 1.5%, but when I pay back these tokens here, they will charge me. So let's borrow. Okay, so we go and confirm that in our wallet. Okay, so let's have a look at my page. Okay, so right now there's a lot of stuff that's happening here. We have, these are our assets. Okay, these are sitting in our wallet and we can sell these. These are our borrowings. You notice that MSPI appears here and here. Because basically I borrowed 0.15 MSPI tokens and they're giving it to me here. Okay, it's a little bit like you go to the bank, you borrow $1,000. Well, the $1,000 is going to appear on your liabilities. Okay, and it's also going to appear in your bank account as an asset because you just borrowed it, right? And then that makes it balance. For people that don't understand that, learn accounting. You need to understand debits and credits, okay, if you're going to be successful as an investor. I'm sorry, okay, but you really need to understand the very basic definitions of accounting, the very basic principles, okay? So you have a debt here and you have an asset here and they're equal at the moment, okay? Now, this debt is guaranteed by a collateral, okay? So we have here some AUST that is guaranteeing that debt. If the price of the debt goes up too much over the value of the collateral, then I will get liquidated here. Now, so we have to be very careful with this. We have to make sure that if we're shorting an asset, that this asset has a very low chance of going up a lot in value very fast. Right now, I'm convinced, and I could be wrong, I'm convinced that the S&P 500 in the United States is going to go down for the next several months, maybe up to a year, maybe more, unless the market conditions improve considerably. Okay, we saw that inflation is very high, and because of inflation being very high, interest rates are going to go up. I forgot to mention that the war in Ukraine is really not helping, because it's pushing up the price of petroleum, which increases inflation further, and it's pushing up the price of food supplies, because Ukraine is not producing food anymore, which it's not selling to Europe, and Russia right now produces food, but it can't sell it to Europe because of the sanctions. So Europe is just 2 fingers away from starvation and famine. Okay, some other countries are going to be even closer to starvation in Africa, because they depend on exports coming from Russia and Ukraine. Okay, so they're going to need help from other countries. Probably China is probably going to step in and provide them with food. So there's an opportunity to make money there as well. But anyway, so this is the first step. Now, what I did in the other video is that I took this asset here and I traded it for some UST, and then I used the UST, deposited it on Anchor, which gave me more AUST, which I use as collateral to borrow more MSPI. Why would I do that? That's because basically I'm using the MSPI that I'm borrowing to increase the amount of money that I have sitting on Anchor and earning me 19.5% interest. Okay, and if I do this well, instead of having, like right now we're using only $100 AUST, that 100 AUST is earning 19.5%. That same 100 AUST, if we loop this several times, could earn up to 3 times more. Okay, because we're using the same money over and over and over, and we're looping like this. Okay, and at some point we have 3 times as much collateral that we had from the beginning. Okay, and that increases our rate of return. Instead of earning only 19.5%, we're earning 58.5%. Okay, almost, and that's 3 times more. Okay, that was what I explained in my previous mirror strategy video, where I explained how you can triple your rate of return on Anchor using this strategy. So we're going to do one loop, and then I'm going to show you how to unloop. Okay, because I've been asked this question a million times already. Okay, so we got our MSPI that we borrowed. The borrowing is here. This will not disappear. This we're going to trade. All right, so right now, what does it say? It says buy. Well, we don't want to buy, we want to sell. So we want to sell our MSPI, and we can only sell it for UST. We cannot sell it for AUST. All right, so we're going here, and this 0.1538 MSPI, we can sell it for 64.56 UST. All right, so we're going to sell it, post, and we're going to see that up here we're going to have more money, more UST is going to appear. See, right now we have 144 UST because we added 64 UST to 80. Go back to my page. Now, if we look at our assets, now we have MIR, we have mGoogle, but the MSPI is gone. The MSPI on the liability side, the borrowing, is still there, but we have extra cash available in our wallet here. All right, so let's use that to borrow. Well, first of all, we're going to deposit that on Anchor. So go back to Anchor, and we're going to deposit, let's make it simple, just $64. Okay, and we proceed. Confirm. So we're going to see the amount here go up a bit. See? And I need to see you have 64 UST that becomes 51.76 AUST. So that's the amount that we're going to use to do the looping, okay? Because we just want to start with the initial amount that we had, 100 AUST, and now we're looping it, okay? So we created 51.76 AUST, which we're going to use to borrow more MSPI tokens. So go back here, go borrow, go down to MSPI. Where did it go? Here. All right, so again, we're going to change the collateral for AUST, and just for simplicity's sake, we're going to see 51, and I'm going to go down, and we're going to borrow, and we post. Okay, so it's ready, and magically we've got more MSPI that we, because we borrowed, right? So we borrowed them, we use that 51 AUST as collateral, so it allowed us to borrow more MSPI. Now those MSPI are sitting also on our asset side, okay? And we could trade them again for UST, deposit them again on Anchor, get more AUST, and then we could borrow more MSPI, and so on and so on and so on, and loop and loop and loop and loop and loop until the amounts are just ridiculously small and it's not worth it. So, all right, so now we need to do the opposite. So basically, you need to start with some MSPI asset, and you need to pay back what you've got here. But most people are confused because they don't see that here. So we're going to go and sell this because most people don't have it in their wallet. Okay, they already sold it, so let's go for that. I'm paying a lot of gas for you guys, you know, in this video. Hopefully you're gonna like the video. Don't forget to like the video, otherwise the sheep gets forked. Okay, if you want to save the sheep and you don't want the sheep to get forked, like the video right now. I'm spending several dollars on transaction fees here, people, just for you, okay? All I ask in return is for you to like the video. Is that so much to ask? Really? Come on. Watch and like. That's what we need. The YouTube algorithm loves that. Okay, so we're still waiting. Transaction was processed, no? Oh, forgot to post. There we go. Okay, so now it's posted. Okay, my page. All right. So I'm going to assume that this is what you're seeing on your page on Mirror, right? You're not seeing any MSPI in your assets, right? And you're seeing this debt here. And you say, okay, I want to unloop this. I want to pay back this MSPI. What do I do? All right. Well, it's not so hard. Basically, what you can do, okay, is you look at how many MSPI tokens you've got. I've got 0.078578 MSPI up here. So I need to make sure that I have at least this much. So we can probably copy this and then go there. Here, you got the edit page. This is if your collateral was too low, you could add more collateral here. Okay, if you want to maintain your position and you're scared that the price of MSPI is going up too much, okay, and you don't have enough collateral to balance it, to cover it, then you could add more collateral right here, but we're not going to do that. That's not what we want. We want to unwind this. So we're going to close, okay? It says here, buy MSPI to close position. You just click the link and we're at the right page. It says trade. You want to buy So we want to buy MSPY. Okay. I'm going to put how much we want here. Okay, so it did like it. All right, let's make sure we get at least 0.08 MSPY this way. We'll have enough. So let's put that here. Let's see, that was around $60. All right, let's buy more than we need. It's fine. I don't remember exactly how much in USD that's worth, but that's fine. Okay, so we're buying a little bit extra. We confirm. As long as you have at least the same amount that you borrowed, you can close one position. Now we had 2 borrowing positions, so if we want to close both of them, we're going to need to repeat this twice. All right, so we go here, come back here, we're going to hit manage, we want to close, okay. And now because we have enough MSPY tokens available, okay, we're allowed to close. So we hit close, confirm again, and we're going to see my page. Going to refresh, and you see that position disappeared. So we close one loop. I still have a little bit extra tokens here. That's why it appears in my assets. Now, if I wanted to close this one as well, I need, okay, it's worth $68. All right, so we're going to buy a little bit MSPY, and then we're going to close the position. So I'm going to click on manage again. I'm going to close. And then we're going to get the link here because we don't have enough MSPY in our assets, right? Close that. And, oh, hang on. Yeah, we're going to need a little bit more cash. So I'm going to withdraw from Anchor. See, the amount, as you close your position, the AUST that you were using as collateral now goes back on Anchor. And you see that the amount of deposit goes back up. So that's normal. Everything is working just perfectly. So right now I want to withdraw a little bit of money to make sure my transaction goes through and I'm not running out of cash. So let me borrow 100 just to make sure I've got enough. Actually, I'm not borrowing it, I'm withdrawing 100. Okay, so notice how much we have right now. We have 742. After I close the other position, this will go up. All right, so it doesn't see how much money we've got, so we're going to need to refresh. Should be 160. There we go. And we want to get MSPY. Oh, hang on. MSPY right here. Okay, so we wanted to have, how much was it? 68 something. So let's put $70. We buy. Confirm. Okay, so go back to my page. Now we have a bit more MSPY that we can use to pay back our borrowed MSPY. So we hit manage, we hit close, and now it's not giving us a warning message, so we're ready to close. So it's gonna, we have more MSPY in as assets than we have as debt. So we can pay it off, and we're gonna have a little bit extra at the end. And whatever we've got extra, we can convert back to USD or whatever we want to do. Okay, so there we go. All right, and this position is going to disappear. See, our debt, our MSPY debt is gone. We only have MSPY assets, whatever is left here of the tokens that we bought. And we can trade them for whatever. We can buy more Google. We can buy yet another synthetic stock and just convert it back to USD, whatever we want. And that's about it. I'm going to show you very briefly the farming. You can farm the tokens. The way they're presented to you is those with the best rates are typically at the top in blue. Okay, so right now if you were to borrow MVIXI, that's a short-term future ETF. It's very volatile. I wouldn't recommend you play with that too much. You got MGalaxy, Johnson & Johnson. Okay, you could borrow these, and that would earn you 20% and 19% here. And you would see that accumulate over here on your page, right? Now, a very sophisticated strategy would be to go long and short on the same asset. So let's say you find very attractive rates. For instance, here you're earning 20% long, 10% short. That's 30% essentially. You could go long and short on this asset. Here's another one that's even better. You get 19% long and 19% short. So almost 40% you're earning on this one. So I'm not going to go through this one because it's a little bit more complex to perform, but you can do delta neutral farming on this. Okay, yeah, so that's another way to play with mirror. There are tons of things you can do with this, tons of things. This mirror is very, very fun to play with because you can adapt it to many different kinds of strategies. So I showed you two strategies today. We went long on, oops, my page. We went long on Google because we believe that Google will go up no matter what. And we went short on MSPY because we think that this year, at least for a good part of this year, maybe more, probably going to have a recession or something bad, and the stock should probably go down, especially right after the Federal Reserve announces interest rate hike. All right, so that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget that the sheep is going to get forked if you don't like the video, okay? Don't forget to ring the bell so you know when I'm posting the new video. You can also download the free book. The link is in the description below. All you need to do is put your name, your email address, and hit the submit button. And again, get a big fat button that says download the free book. If you miss that button, don't worry, we're going to send you an email that says download the free book also. And if you don't want to download the free book, that's okay. You go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send me $1. See you.